everyone, and I'm going to do something which is completely illegal. As a student, I never did this, and I get very scared for other students when they do this. That is the tax paper analysis or any paper analysis. Once the papers are over, you should let ICI correct it and give the result. But nonetheless, for those students who are looking to analyze their paper, specifically the tax paper for Jan 25 CA inter exams, this video covers it all. TT, GST, MCQs, what happened, how tricky was the paper, how easy was the paper, how much did we cover in our books already, how much did we not cover, all that will be discussed in this session. So watch out, I'm going to put up the papers first and then we will move ahead and then we will look at so here it is. This is the first part or the MCQ part of the paper. We'll be looking at this first and then we'll be moving to the distributive part. Everything that you see, or whether it's this paper, whether it's a discussion, whether it's a calculation, will be shared to you in that link. So that whenever you feel like analyzing it in more detail, you can do the needful. So here we go. This is the first case scenario and this is specifically under GST. Case-based scenario, so they'll give you a little case, a little story, and then they will ask you some questions related to that. So let's talk about this one. And also when we talk about something, we'll also talk about which chapter it is from. This chapter is mainly from place of supply and some under supply as well. Let's see. There's a company called Moria, which is registered under GST, engaged in textile manufacturing business in the state of Tamil Nadu. For the financial year 17-18, that is long back when GST was first introduced, the due date for furnishing annual return was 7th Feb 2020, but the accountant submitted it late on 7th March 2020. No appeal or revision or investigation was faced for the said financial year by the firm. So this is something about that year. We'll talk about it. They supplied dhotis and saris to various state government during the month of March 2024. Guys, if you remember, there's a new chapter called TDS. Whenever you have any supplies to the government, then TDS might apply. So just quickly recapping it, TDS section is 51. If the supply is more than 2,50,000 excluding GST, only then TDS applies at the rate of 2%, whereas one is CGST, one is SGST. If it's IGST, then 2%. And remember, this TDS does not apply in two cases: when two government entities are dealing with each other, and second case, when the supplier and the place of supply is in one place. Example, you're in Karnataka, the place of supply is also in Karnataka, but the recipient is in another state. In that case, TDS does not apply. So this also could be some question here. They supplied dhotis and saris to various state governments during the month of March 2024, details of which are as follows. They supplied saris worth 2,80,000, including GST at 12% to the government of Tamil Nadu for Tamil Nadu New Year. So if this is more than 2,50,000 after removing GST, then we'll have to see. Then he supplied dhotis worth 3 lakh excluding GST to the government of Tamil Nadu. On this, definitely there will be TDS. And he supplied both saris and dhotis to the government of Andhra Pradesh. So remember, you're in Tamil Nadu, you supply to someone in Andhra Pradesh. That is completely okay because that is IGST. But for Telugu New Year, valued at 3,50,000, including GST at 12%, the said supply was made to government undertaking in Tamil Nadu. So you're in Tamil Nadu. The place of supply is in Tamil Nadu, but the other person is in Andhra Pradesh. In this case, in this case, TDS will not apply. Invoice was issued to the Andhra Pradesh government in Tirupati. During the month of April 2024, the firm made wrong availment of excess ITC under IGST. So basically, whenever you purchase something, you get some credit. That credit is called ITC, as you know. And they made some excess credit. They used some excess credit up to 1 lakh rupees of IGST. But during the same period, starting from the excess availment up to the reversal, the balance in CS and IGST was 70, 20, and 20. That means you already had some money, but you excess availed it. So let's look at IGST. How much did you excess avail? 1 lakh when you already had 20,000 in the IGST credit. So basically, excess availment was 80,000 on which they will charge you interest. The firm identified the wrong availment and reversed the excess ITC avail. So the excess ITC avail is technically only 80,000. Ignore the breakup of tax between CGST, SGST, IGST for GST, TDS purposes. So basically, they're saying that don't calculate IGST, CGST, just calculate the total. Based on the above information, choose the most appropriate answer. So here, guys, place of supply is something that is being tested. TDS is something being tested. And this reversal excess credit is being something that is being tested. Moria and company will be required to read in books of accounts and records. There's a small chapter called accounts and records that is being tested here in this first one. How much time should we maintain it for? If you remember accounts and records, guys, whenever you have to maintain accounts and records, you have to maintain it for 72 months. That is nothing but 6 years. So 6 years from your birthday, no, my birthday, Narendra Modi's birthday, no, from the annual return filing date. So what was the annual return filing date here? 7th of February 2020. That is the annual return due date. sorry, due date, from that due date. So 7th February 2020, we have to calculate 6 years. So basically 7th February 2026 is the right answer. So here we go, 7th February 2026. C is the right answer. What I have done, I'll show you what I've done here. I have solved these GST MCQs. I've given the answer also, 7th Feb 2026, as per GST and accounts records to be maintained for 6 years, 72 months from the annual return filing due date. Yes. So you can have a look at this documents as well. Next, determine the gross amount of TDS ignoring breakup between CS and I. That means they don't want 2%, 1%, 1%. They want the total answer will be deducted by the respective supplies to various governments. So the first supply, there was no GST because the supply was not more than 250. The second there was, and the third again there was not. So supply 1 is below 250 excluding GST and hence no TDS. Supply 2 is subject to TDS, so 3 lakh into 2%, that is 6,000. And supply 3 is not subject to TDS because the location of supply and place of supply are in one state, but the recipient is in another state, so he will not be able to take the credit. So in this case, 6,000 only, and then the answer is B. Here we go. This is the answer, which is B. Next, in respect of excess claim of ITC under GST, did you claim some excess ITC? Did you take some excess credit? Yes. How much excess credit did you take? 80,000 for IGST. On that, there will be credit. So answer is C here. That is 80,000. We move to the next one. Alpha Bay Industries, very, very simple. Okay, let's also see the first 3 ones. They were not very difficult. They were not very easy. They were medium scale. This one is very, very easy. So ICI tries to balance it. It's a roller coaster ride, but some questions like this is very simple. Alpha Bay Industries is a registered person dealing in taxable goods all over India. So they are basically someone who's registered under GST. And last year, the turnover was 6.75 crore in the last year. Is required to issue tax invoice with how many HSN digits? If you remember, guys, up to 5, you need to issue 4 digits, and above 5, 6. If you remember, the shortcut also was there, that above 5, 6 digits of HSN code for both B2B and B2C. So answer is D, 6 digits for goods supplied to registered as well as unregistered persons, B2B as well as B2C. So answer is D. Next, this is a lady called Padmini. She's a Kathak artist. Before that, let's go to exemption. If you remember, guys, any recreational Indian classical, but for recreational purposes, training is exempt from GST. Second exemption, if you're an artist, Indian classical artist, not a brand ambassador and charging up to 250,000, then that also is exempt from GST. Let's see which of them is exempt and which is taxable. So she's done 1, 2, 3, 4 supplies. Which of them will be subject to GST? Let's check. Fees received for teaching Kathak. It's Indian classical. You're teaching someone recreational purposes. On this 12,50,000, there is no GST. Received from TV channel for appearing one of the shows as a guest anchor. On this, there is GST. Received from performance of Kathak, 250,000. If this was more than 250,000, there would be GST, but 250,000. So on the third one also, there is no GST. And the fourth one, received from the performance of fusion dance. Fusion basically means mixed, which includes both Western and classical. The government doesn't like Western dance, and hence this one is also subject to GST. So the second one and the fourth one, that is 275,000 and 145,000. If you total this up, this will be subject to GST. What is the taxable value of supply? So 275,000 plus 1 lakh is 3,75,000 plus 45,000 is this 4,20,000. So let's check the answer. There's 4,20,000. No GST on teaching Indian classical Kathak and performance since it is up to 2.5 lakhs. On balance, there will be GST. These are the 5 MCQs. Every MCQ gets you marks. This one got you 2 marks. Again, this is not difficult. If you've done exemptions well, you watch my video, I think this should be easy to go. Next. From GST, we dive into DT. This next case scenario is on DT. Let's see what this case scenario talks about. Anand is a traditional farmer. Traditional note, farmer means agriculture, means there is exemption under section 10(1). If you remember, exemption is when you cultivate anything and you sell it. But if you do any composite business, is example, if I grow grapes and I sell and make wine, then we have to consider them as separate and the transaction has to happen at market value. He's a farmer who has inherited 35 acres of rural agriculture land, good for him, which was around 20 kilometers from the nearest town. Basically, the land is completely rural. He's cultivating in 15 acres paddy. Paddy is basically something which you make rice from. He grows that, which is directly taken by rice traders. So this one is exempt because, of course, whatever income here is agriculture income. Another 10 acres of land is used for growing sugarcane. Again, that will also be exempt because you're growing something, so that is exempt agriculture income, which is purchased by sugar mills near the villages for which payments were received by NEFT, RTGS, IMDS, good stuff. Remaining area is used for cultivating of mulberry leaves. Even mulberry leaves, when you cultivate, you're growing something, even that is exempt. And part of the mulberry leaves are used for being fed to silkworms. So the mulberry leaves, imagine it, they're being used to give silkworms. They are worms from which you get some silk cocoons from which they manufacture silk. So this one could be a composite business where you're growing something and then you're manufacturing something as well. And obtaining silk cocoon and selling the silk cocoons in the market during the financial year 23-24, which is your exam year for Jan 25. Of course, for May, the exam year changes now. Mr. Anant had got income of 4 lakh from sale of paddy. Clearly agriculture income, 4 lakh, no doubts about it. 3 lakh 15 net gain on sale of sugarcane, completely agriculture. So 4 plus 3 now, 7.5 lakh definitely from agriculture. 75,000 from selling mulberry leaves alone. This is also mulberry leaves are selling. This is also agriculture. So 7.5 lakh plus 75,000, that is 8 lakh 25 definitely is agriculture income, which is exempt under section 10.1. He carried out mulberry silkworm production. So he's doing some business also using his own mulberry leaves worth 50,000. Now, guys, if you remember, this is rule 7 that if you're transferring something from agriculture to your business, it should happen at market value. The market value is 50,000. Should it be added to agriculture? Yes, because you're selling it to your business. So 4 lakh plus 3 lakh 50, 7 lakh 50 plus 75,000, 8 lakh 25,000 plus 50,000, 8 lakh 75,000 is your agriculture income. Now that this is done, now let's look at the business part. You're selling the silk cocoons by spending 2 lakhs. So you bought some the mulberry leaves for 50,000. You spend more 2 lakhs, so your expenditure is 2 lakh 50,000, and you sold it for 3 lakh 75,000. So 1 lakh 25,000 is your business profit. Let's see the first question for 2 marks. Sugarcane income of 3 lakh 50 and paddy income of 4 lakh will constitute agriculture income. Absolutely wrong. Paddy income of 4 lakh alone is exempt agriculture income. Absolutely wrong. Sale of mulberry leaves amounted to 75,000. Yes. Paddy income of 4 lakh and sugarcane income of 3 lakh 50 will all constitute agriculture income. Yes, but they're forgetting that 50,000 rupees. So here we go, the right answer. Paddy income of 4 lakh, sugarcane income of 3 lakh 50, and sale of mulberry leaves of 1 lakh 25. Yes, 75,000 to outsiders and 50,000 to your own self. This is agriculture income. So answer is D. The sixth one answer is D. Here we go. This is DT MCQ. Sixth one answer is D. Let's move ahead to the seventh one. The amount of 3,75,000 being sale proceeds of silk cocoons to silk cooperatives will constitute as agriculture income. No, that part is not agriculture, so this is not the right answer. The sale of mulberry leaves 75,000 will not constitute agriculture income. No, mulberry leaves also, because you're growing it as agriculture income. Net income from production of silk cocoons 1,75,000. It's not 1,75,000, it's 1,25,000. Let's see this answer. Net income from sale of cocoons amounting to 1,25,000 will not be treated as agriculture income. Absolutely right. It is business income. So answer is D, 7th D. Here we go, 7th D. 2 marks again, guys. Eighth one. What is agriculture income? Is it 8,25,000? No, I remember 8,75,000. So this is the wrong answer. Entire amount of agriculture income is 12 lakh. Wrong answer. Agriculture income is 8,75,000, non-agriculture income is 1,25,000. Absolutely right. So this is the right answer. Answer is C, 8C. The point is that transfer of mulberry leaves from your agriculture to your business, that is the point that has to be noted well. These are 3 MCQs from this case scenario. Let's move to case scenario number 3. Let's see how well we can do that as well. All right, again, now this is case scenario number 3. This again is from DT. Let's see how this works. The dog always goes back to the owner. This is from clubbing of income. Let's see how it is. But before we go here, if I transfer my asset to 4 relationship, spouse, minor child, son's wife or HUF, then the asset will not come back to me, but the income will come back to me, but only the first level of income. Example, if I give debentures to my wife, the interest will come back to me. But from the interest, if my wife buys shares, then the dividend will not come back because that is accretion to income. Let's see how this is. Mr. A transferred a house property to his wife in the year 23-24 for inadequate consideration. That means he gave it and there is no money that he's got, or he's got very less money for it. So the house belongs to Mr. A. Any income from this house property will come back to Mr. A. She received rent of 2 lakh for letting out this property and spent 4,800 as municipal taxes. She deposited the same with the bank and earned 15,000. This is the second level of income which will not be clubbed as interest income. Based on the above information, guys, the rental income will go back to Mr. A. 15,000 will go to Mrs. A. That should be the answer. Here is the calculation. 2 lakh less municipal tax 4,800, that is 1 lakh 95,200, less 30%, that is 1 lakh 36,640. You can also do it in your calculator. This 1 lakh 36,640 will go back to Mr. A. Let's see the MCQ. Mr. A 2 lakh, wrong answer. Mr. A 2 lakh 15, wrong answer. Mrs. A 1 lakh 36, wrong answer. Mr. A 1 lakh 36 640 under house property, and Mrs. A 15,000 under IFOS. Very simple. You get 2 marks for such a simple one. So I know the paper was tricky, but it has elements like this, which is very, very, very simple. Next, if Mrs. A invests the rent amount in a business, so basically she's not putting it on an interest, she's putting it in a business and having a loss of 20,000. Even this is accretion to income. The husband gave a house property. From that rental income, that's first level of income. Then business, and the next one is second level. This will not go back. So this 20,000 loss will remain with Mrs. A. And she has income of 4 lakh. So 4 lakh minus 20,000, 3 lakh 80 will be her income. And 136,640 will continue to be Mr. A's income. So Mr. A 122 wrong. Mr. A 136 and Mrs. A 3 lakh 80 absolutely right. This is the right answer. Why did 20,000 not go back to Mr. A? Because guys, remember that the house property is not what she started the business with. The second level, from the rent income she started a business, that is second level accretion to income. If you put it on a paper, you'll know what is accretion to income. Accretion basically is a second level of income. It is not from the first asset. The first asset was house. From that you got rent. That rent was used to start the business. What if the house was used to start the business? Then it would go proportionately to both. But here that is not the case. It is the rent which she used to start the business. Again, 2 marks. This is another very, very simple question. Next. If Mr. A transfers the above property for inadequate consideration with an agreement to live apart, that is you're separating, then will anything come back to you? No. If you remember our shortcut AS, adequate consideration and separation, in that I had also joked about in class, sad music in the background, they're getting separated, then nothing will come back. The house also has gone and the girl also has gone. That was a joke in class, I remember. So in this case, Mr. A's hand nil, and both 136,640 and house property income of 15,000 of IFOS will also be taxed in the hands of the wife. So this is the right answer. Guys, this is a very easy MCQ. Here are the answers. Case study. This is 9th, 10th and 11th. Let's go to the next one, which is 12th. Alternate minimum tax, something that scares a lot of people. Guys, but this question is very, very simple. Alternate minimum tax is not attracted, in which case it is basically very, very simple. It is under the default tax regime, that is 115 BSE. There is no AMT, so that is the answer. 12D, again for 1 mark, very, very simple. That is in AMT does not apply in case of alternate minimum tax, sorry, in case of default tax regime 115 BSE. Let's go to the next one. Very, very simple for 2 marks. There's Raju, who's got very lucky in life. 25,000 from lotteries, 10,000 from betting, 50,000 from online games. I think Raju has now gone from out of a hand because he's only investing or only making money from casual income. And he has lost 5,000 in card games. So this loss from card games, obviously, if you remember, when you win, who's with you? Government. But when you lose, who's with you? No one. So this 5,000 has to be ignored. The remaining has to be taxed at 30%. So 30% of all the incomes minus 5,000, wrong. 30% of only 2 incomes, 20% of the other, absolutely wrong. 30% of these 3 incomes, and you cannot adjust any basic exemption limit, absolutely right. C is the right answer. Again, very, very simple MCQ for 2 marks. People, just by seeing one question, you cannot comment that the entire paper was difficult. There were shoots like this, which were very, very simple. There were parts like this that were very, very simple. We go to the next one. Case scenario number 4. Again, this one is on GST. So we'll look at GST again. So this one is a person in Kerala. He is registered under GST. Let's see how this works. He's basically registered under GST, supplies cosmetic items within Kerala. So intrastate only. He ordered an iPhone for a studying son who's studying in Pune. Good, taking care of his son by giving him an iPhone. So he's in Kerala, bought an iPhone, which is from for someone in Pune, Maharashtra, through online e-commerce operator located in Delhi. Doesn't work, doesn't matter. Guys, he's not registered right now. So he'll have to pay GST, but he will not get any credit on this. He gave his Kerala address for billing and the son's hostel address in Maharashtra for delivery. Typical. The supplier in Delhi dispatched the phone and it went to Karnataka. from his godown in Karnataka. So, although there are many, many states, don't worry. If there is place of supply, section 10, there's a good shortcut. In case of any movement of goods, it is wherever the goods movement terminates. The goods movement here terminated for delivery in Maharashtra. So, Maharashtra will be the place of supply. The section is section 10(1)(a). If you remember the shortcut, arrive. Next. Then he applied for registration under GST in the name of Mr. Mohan Raj, a proprietor. So he has registered now under GST, but as a proprietor. Proprietor means single individual doing a business. And he got registered in the state of Kerala. During the month of June 2024, that is after being registered, he purchased goods worth 5 lakh. On purchase, you can get credit. Yes, PC, if you remember the shortcut. Out of the above purchases, gifted stock worth 2 lakh to his daughter. As even if you gift something, even on that there is GST. If you remember free supply, section 7(1)(c), if it's a related person, there is GST on that. So 2 lakh will be outer supply, outward supply, supply leads to liability. He supplied stock worth 1 lakh 50 to unregistered buyer. Doesn't matter who the buyer is, as long as you are supplying and you are registered, you need to charge GST. So on 2 lakh and 1 lakh 50, you need to charge GST. Mohan Raj paid 10,000 towards rent to a local municipal corporation for the shop taken on rent at a bus terminal in Kerala. On this also there will be GST, but this is a service, renting service. And he paid rent of 20,000 for a residential property which is used for residential purpose. If you remember a recent amendment, which we spoke about in the amendment video also, the residential property used for residential purposes by a proprietor will not be subject to GST. So on this there will be no GST. All the amounts given are exclusive of tax wherever applicable. On goods, it's 6, 6, and 12%. And on services, it's 9, 9, and 18%. Let's see what they're talking about. In respect of iPhone ordered and delivered, the place of supply will be, as per section 10(1)(a), the place of supply will be Maharashtra, if you remember. So this is 10(1)(a), and Maharashtra is the answer. 14, this is the one, here we go. 14D, Maharashtra. Next, determine the value of outward supply, including supply under RCM. Was there any supply under RCM? Yes, let's see what it is. First, for 2 lakh is a supply. Yes, 1 lakh 50, so 3 lakh 50 is a supply. So if you want to eliminate 1 lakh 80, 1 lakh 60, they go out because it's lower than 3 lakh 60. Here we go. 2 lakh and 1 lakh 50, 3 lakh 50, it has to be 3 lakh 50 or more. So this is not the first and second answer is not the right answer. Now 3 lakh 60 or 3 lakh 80. I told you that this 20,000 is exempt from GST. So there is only 10,000 which is under RCM. So 10,000 also if you add, the answer is 3 lakh 60. 15C is the right answer. Here we go, 15C, 3 lakh 60. Two supplies, 2 lakhs, 1.5 lakh and RCM of 10,000. The residence given to proprietor, there is no GST. Next, amount of credit that he can claim for the month of June. So there are two credits he can claim. First, he's made a purchase of 5 lakh rupees. That is goods on 5 lakh at 12%. That is on 5 lakh 12%. Here we go. On 5 lakh 12%. That is the credit he'll get. Plus on RCM when you pay, there is also credit because again it is a purchase. So you're paying on 10,000 rupees 18%, which is small amount, 60,000 plus 1,800. That is 6,100. And divide by 2 because CGST, SGST. So that is 30,900. This is the right answer. Here we go. 30,900. Answer is C. This is question number 16. I felt this one was a little tricky, but as compared to other MCQs, not the most difficult, but as compared to others, it is a little tricky. So this one was a tricky one. The others were simpler. This is the part of MCQs. Now we go to the descriptive questions and let's see how that works as well.
And now it's time for the descriptive part of the tax paper. Jan 25 tax paper was kind of tricky. But again, guys, some parts were easy, some parts were difficult, and that's what makes an ICI and ICI CA paper. So we'll discuss the descriptive part first. We'll start with DT and then we'll move to GST. I'll tell you a little bit about it, but there's a surprise here for you guys. Let's see what the paper was all about. This is the paper. I'm talking about the descriptive paper. Here we go. This is the first question, compulsory for 15 marks. I'm going to read this question for you and just show you that how they copied the same question from another year of ICI paper as well. So this is Rohit, who's 65 years old. So remember, his basic exemption limit will be 3 lakh. And they have already said that you have to compute it as per the old system or the optional scheme because he's moved out. He has exercised the option of shifting out of the default tax regime. So this is something that is very, very easy for you guys to do now. 65 years old, he's a qualified medical practitioner, so he's a doctor. He runs his own clinic. Income and expenditure account is as under. So here we go. Incomes are here, expenditures are here, and there are some additional points which I have solved here. I'm going to read one point and show you. Consultation fees is okay in PGBP. Salary is not okay, so we'll have to remove this. Rental income is not okay, we'll have to remove this. Dividend is not okay, we'll have to remove this. So we'll have to remove these three, and I'll show you how we'll remove these three. Here we go. So I've started with PGBP and I've removed these three incomes and I've taken it to different parts like salaries, house property, and IFOS respectively. Salary to staff is okay, admin expense is okay, conveyance is okay, power and fuel is okay. Interest on housing loan you cannot minus, so you'll have to add 1 lakh, which I've done here. And next is 27, interest on education loan for son. It's good that you're making your son study, taking a loan, but this again is a personal expenditure. 80E you will get a deduction. So I've written here as 80E. This is something that I've done in class also. This is the same pattern of doing it in rough first before you write the final number. Next, amount paid to scientific research, everything is okay. So these two numbers we've given effect to 1 lakh and 26,000. Here 1 lakh and 26,000, we've added it back. Now let's go to the additional points. He's working with a hospital. He's a doctor, of course. He can work with a hospital. Part-time, his salary details are as under. Basic pay, transport allowance. So basic pay into 12, transport allowance into 12. Remember, transport allowance, if you have spent any money for traveling for office purpose, you can minus, but not from your home to office and back. We've already discussed this in class as well. You have written it in your handwritten notes as well. Next, his son had undergone a medical treatment in the same hospital. Is it a perquisite? Yes. But if you remember GMC hospital, government or managed by a master, that is your employer, here it is the same hospital he's working in, and hence this perquisite will not be taxed. So you will tax 13,000 into 12, 1 lakh 56, 2,000 into 12, that is 24,000. These two amounts you will tax and you will not minus anything. So here we go, that's 1 lakh 80 minus standard deduction of 50,000 because it's the optional scheme, and 1 lakh 30,000 is the final salaries number, which I've highlighted in yellow. Next, moving ahead, he owns a residential house. So this is from IFHP. We'll go there in some time from now, not right now. Um, so the second point remains completely undone. Other information. Payment of salary of 25,000 to sister-in-law. This is the same question. I'm going to show you the question now. Surprise, surprise. Mrs. Mithil, this is a November 2019 paper, where is the same consultation, salary, rental, dividend, same, exact same. And you guys are wondering whether ICI questions can be very unpredictable. No, this is very predictable. If you've done this in class, you solved it in your notes. Interest on housing loan, exact same. Basic pay, transport allowance, true care hospitals. Only thing is instead of true care hospitals now, it is only care hospital. So a lot of similarity, residential house, and a lot of other things here which are common. So this is sister-in-law, and we've discussed in another question that sister-in-law is not in the definition of relative. And hence, if you pay excessive to her, there will be no adjustment in this case. So 25,000, no adjustment here, only a note, which I have written here. Here is the note. Sister-in-law is not in the definition of relatives, and hence the section 48(2) will not trigger, which is disallowance for excessive payment to relatives. We go back to the paper. Next, conveyance expense 12,000 incurred from your house to office and back, which has been included in conveyance expense, has to go remove it from conveyance. So 12,000, we have to remove it. Here I've removed 12,000, I've added it back. Next, power and fuel expenses, 6,000. Can you incur expense on power and fuel? Yes, but this is for house property. So you have to remove it from here. So 6,000 removed from here as well. Next, admin expenses include 10,000 paid as municipal tax for house. Again, this is for house property. So remove it from here. So 10,000, I have removed it from here. Here we go, 10,000 removed it from here, taken it to respective places, which we will see ahead. Next, clinical equipments. This is for depreciation, 1 lakh rupees on 15%. And fresh purchases made in cash, 25,000. If you remember, that's not allowed. So on this, there will be no depreciation. So only on 1 lakh rupees, you'll have to calculate depreciation, which is here. So all this will summarize your PGBB, which is 7 lakh 30. This is also done 1 lakh 30, two heads of income wrapped up really well. Now we move ahead to play tuition fees for granddaughter. ATC is tuition fees only for children, not for grandchildren. Again, this is same. This is not similar. This is same. Your granddaughter. People 15 marks or ICS gift to you from this sum because the same question. Again, here, clinical equipment, same question, 25,000 paid in cash. Very, very predictable. And higher education loan interest is 26,000, which will go on to 80E. Again, same question here. So remember, ICI repeats their questions. Anyways, moving ahead. So these two heads are done. Now let's look at IFHP. He owns a residential house, ground floor 50% is self-occupied. So there are two parts. We'll also do two calculations. First is SOP. SOP, all the numbers are zero. Only thing is interest deduction we get, but this is reconstruction. So for reconstruction, the deduction is only 30,000. So IFHP, house property, For SOP, it's only 30,000 loss. What about LOP? He has given the house on rent from 1st October onwards only for October, November, December, Jan, Feb, March. That is 6 months into monthly rent of 10,000. That is 60,000. You will minus the municipal tax, but remember, not 10,000 only, half you have to apportion it. So 5,000 municipal tax, your NAV is 55,000, 30% standard deduction, interest. Now, the total interest that you're paying for this period is 60,000 plus 40,000, that is 1 lakh, out of which 50,000 belongs to SOP, 50,000 belongs here. So I'm minusing 50,000 here. So it leads to a loss of 11,500, here a loss of 30,000. So overall loss of 41,500, which is from IFHP. Remember, this loss can be adjusted. House property is a friendly head. It can go to anyone. So I'm going to minus it from PGBP. And last is IFOS. Let's see what is in IFOS. One dividend will go in IFOS. Then when you give this house on rent, there is some part which is for power backup charges, 3,000 per month. That is also going to be in IFOS. So 3,000 into 12, 36,000. And for that power backup, the fuel expense, you can minus 6,000. So net, it is 40,000 rupees. So 1, 2, 3, and 4 heads of income. We total it up. We get a GTI of 8,58,500. Only one deduction, ATE, that is 26,000. Let's check the hidden deductions. ATTTA, no. TTB, no. ATGG, no. Total income is 8 lakh 32,500. This person is up to 3 lakh rupees, no tax. 3 to 5 lakh is 10,000, and 5 lakh to 8 lakh 32,500 at 20% is 66,500. That totals up to 76,500 basic tax. He will not get rebate because rebate is only for people who are up to 5 lakh. There will be no surcharge because surcharge is a rich man's problem. So we get the total tax, including surcharge, sorry, including cess of 4% is 79,560. This is what he'll have to pay. These are some working notes here. I'm going to share this link with you guys so you have access to this folder as well. And these are some working notes. You will have to put this also. This covers up your 15 marks. I have a feeling that a lot of you guys knew this well, had done the November 19th paper with me in class also, revised also. So this should not have had been a problem. We move to the next question. Question number 2, now it's option. Options in life are good, whether it's people or whether it's exam sums. Option means if you don't like it, you can skip to the next person or the next question. Let's see this one, whether I will do it or not. He has a proprietary business. He's transferred his business by way of slump sale. If you remember Britannia section 50B, if you sell it by slump sale, there is capital gain, and you have to calculate the net worth of the entity. The net worth means assets and liabilities. You take all the assets, ignore revaluation. Depreciable assets have to be a WDV, and all the liabilities you minus, and that's how you calculate. So definitely a sum that I will do. Next, this is 2A. 2B is basically some guy who's getting some professional receipts, some consultation, and we have to talk about the TDS aspect. So question number 2 is something I'm definitely looking forward to. 2A done, 2B done, and 2, that is 2. Now that I know that this is something I know, I will in the exam start doing the sum. Okay. So Paras has a proprietary business. He has transferred his business. Capital gain, if you remember my shortcut from capital gain, ATPSC. Here we go. This is ATPSC. What is the asset? It's an undertaking. Have you sold it? Yes. Period of holding, long term. What is the sale consideration? Let's read. For a total consideration of 40 lakh rupees, generally we take this or FMB, whichever is higher. They've not given the FMB right now, or they've given it 35, so we'll take 40 lakh, which is higher. And now the cost is nothing but the net worth, which is assets minus liabilities, which we will have to calculate. Let's continue. There were some expenses of 1 lakh 50, which we can minus because expenses on transfer can be minused. We move ahead. Assets is building, debtors, machinery, other assets, 4 assets. Liabilities, own capital is not a liability. Bank loan, creditors, and loans, unsecured loans are minusing. Bank loans includes 2 lakhs for personal purposes. So bank loan becomes from 5 lakh, it will become 3 lakh. Here we go. Machinery costing 50,000 has been allowed as 100% deduction. So then from 5 lakh, it will become 4 lakh 50, which is here. So these two numbers are done. Next, other assets include self-generated goodwill. We don't include self-generated goodwill. So from other assets, I will minus 3 lakh 60 minus 60. So that is 3 lakh, which is here. One more number done. Unsecured loans include 1 lakh for amount payable for the purchase of ornaments for his wife. That's not a business expense. So I'll remove 2 lakh 50 and I'll make it 1 lakh 50, which is here. The other numbers remain the same. 18 lakh comes in. Here 18 lakh. Machinery comes in at 5 lakh. And there is creditors of 4 lakh 10. So if you take all these assets, 30 lakh 50, all these liabilities, 8 lakh 60. So your net worth is 21 lakh 40, 21 lakh 90. I'm sorry. This 21 lakh 90 cost is selling it of 40 lakh. Definitely there is long-term capital gain, which is calculated here. 40 lakh minus expenses on transfer. Net sale consideration, remember slum sale does not get an indexation, so 21 lakh 90 and long-term capital gain is 19 lakh 60, which will be taxable at the rate of 20%, which they've not asked. They've only asked us to calculate capital gains. Perfect. The next person. Question number 2B. It's on TDS. We expected TDS to come in and it's come in for 4 marks, which is great. Ganesh, whose professional receipts last year was 1.25 crore, basically that means he's subject to audit because audit for that 50 lakh or 75 lakh are the limits. He has some multifaceted activities. He's a CA just like one of us and examine the TDS provisions payable by Mr. Ganesh to Mr. Rajesh. Professional fee for consultation 32,450. 194J says if your professional fee that you're paying is more than 30,000 rupees, there will be TDS, but this has to be excluding GST. So this is including GST. If we excluded, there will be no more than 30,000 and hence there will be no TDS here. No TDS since amount is not more than 30,000 per person per category. Next, royalty payment is 2 lakh 50 on royalty payment for use of computer software. There will be TDS at the rate of 10%. So TDS will apply 25,000, which is 10% of 2 lakh 50,000. Next, technical fees. Technical fees, if you remember, the TDS rate reduces to 2%, but here it's only 20,000. And this has to be seen per categories. If you remember the shortcut PTNRD for professional fees, this is T, technical services. In this case, there will be no TDS. Otherwise, it would have been at the rate of 2%. And last, for teaching accountancy to his son. Guys, is this professional? If you remember, personal limit, a small personal limit, this does not apply because for a personal purpose, and hence on this 40,000, even though this is more than 30,000, because it's a personal purpose, there will be no TDS. That's your 4 parts to 4 marks of a question. Very, very simple. All you have to write in the section, the rate and the amount. And if it is not applicable, you have to give the reason why it's not applicable. Perfect. So question number 1 is done. I'm just going to read it out here. Question number 1, which was supposed to be compulsory, is done. Now question number 2 is also done. Now it's a choice between 3 and 4. Let's see what is 3 and then let's see what is 4. In 3, there are two parts, A and B. What is the meaning of micro small enterprise under section 43B? If you remember 43B M3, in my amendment video, we had spoken about now that you pay to micro and small enterprises. Again, there is a disallowance if you don't pay them in the year up to certain days. So this they're talking about. Along with that, they've given some as a following assets. They've asked you to compute depreciation. And for both of this, they've given 6 marks totally. And 4 marks here. So there is 10 marks. And this one is compute the total income and income tax around. So this is computation of income. Ideally, for someone who did not know this, maybe 1 or 2 marks will be reduced, but otherwise, this looks like a doable question. Question number 3 also. But let's see question number 4. Question number 4 is interesting because this has a lot of losses. So this is set off. I told you in the prediction paper also that set off will be there. You can go on my Instagram and check. There is a prediction. And in that, I had predicted return of income. I had predicted set off. I predicted TDS and I predicted PGBP. And all of them are here. So this one we will definitely be doing. This set off is for 6 good marks. And then there is 4 marks of return of income, which is here, this one or this one. So that means you can either attempt these two or you can either attempt these two. Now it's very tempting because both of them look like something that we can do 3 and 4. So let's filter out which will we know better. Capital, this loss, this is a practical question. So we'll know it really well. 6 marks secured here. Whereas here, what are all the persons required to mandatorily file return of loss under section 80 and consequences of not filing the return on time, which is lift. So this is a great question. So answer question number, this B1, 4 marks. What is a belated return and when it should be filed? This is also something that you know. Explain the non-applicability of updated return. Guys, updated return is something that was new and we had discussed that return of income chapter is important and so many things from return of income are there. Now your choice, if I was giving the paper, I would have done this because this is more predictable, this B part and this loss. But of course, while discussing the paper, we'll discuss everything. Here we go. What is the meaning of micro small enterprise? Micro, there is an act called Micro Small and Medium Enterprise Act. As per that, a micro enterprise is someone whose plant and machinery and turnover is a 1 crore and investment in plant and machinery is 5 crore. So 1 and 5. And do it 10 times, that is small enterprise. Small is 1 crore becomes 10 crore in terms of sales and 5 crore becomes 50 crore in terms of plant and machinery investment. That's a micro and a small enterprise. Mr. Prem had the following assets. Let's calculate depreciation. Very, very simple depreciation. A machinery 4 lakh, which was used for scientific research. And if you're using it for scientific research, A machinery costing 4 lakh, which was used for scientific research related to business and deduction under Section 35 was allowed, which is 40,000 rupees. So if 40,000 is allowed, only on the balance you can take depreciation at the rate of 15%. A laptop received as a gift from a friend costing 60,000. It was purchased in the year 2022. So on 60,000, you can claim depreciation. This is at the rate of 40% because it's a laptop. And a temporary wooden structure. This is something that a lot of people would have had doubts around wooden structure. What is the rate? So wooden structure is 40%. In case you didn't know it, in case you didn't know it, it's okay because we always had an option. So if this and this was a problem, why worry? We have an option. So this was something which is could do it, but if you didn't know it, you could always fall back upon question number 4. We can do this as well. I've given you the solution here. This is question number 3A and 3AB, computation of depreciation. And this is the next one, which is computation of income and tax. He's 83 years old. He's a resident and he has these following receipts. Installment receipt from bank under reverse mortgage. Reverse mortgage, we had discussed that the money that you get under reverse mortgage is a loan, so it's not an income. So this is exempt. There's a section called section 1043, if you remember. Interest on bank, IFOS. Interest on bank, again IFOS. Remember, you'll get a deduction under 80 TTB because it's the bigger person, more than 60 years old, 60 or more. Pension from central government will go under salaries. You'll get a standard deduction there. STCG on sale of dining tables and chairs. As personal assets, there is no capital gain, and hence this is not taxable. Remember, asset is anything which is except personal movable asset. And income from dairy farming, this is taxable under IFOS. Remember, dairy farming is taxable. The only culture we like is agriculture. All the shortcuts of mine we had discussed in class. The only culture we like is agriculture. So dairy farming is taxable. So one amount taxable, two amount taxable, three amount taxable, and four amounts taxable. Here we go. Let's talk about it. FD interest taxable, savings interest taxable, dairy taxable. This is IFOS 2 lakh 95. Salary taxable 4 lakh. Total becomes 6 lakh 95,000. Remember, he's 83 years old. So up to 5 lakh rupees, there will be no tax. Anyways, 80 TTB is 50,000. Total income is 6 lakh 45. Up to 5 lakh, no tax from 6 lakh. Sorry, from 5 lakh to 6 lakh 45 at the rate of 20%. This is the tax that this person is liable to pay. Reverse mortgage is exempt. That's one note. Capital gain does not apply on personal mobile assets. Second note. Agriculture income is exempt. Dairy is not exempt. Section 194P, if you remember. In P, we had said that if a person is 75 years or more, pay for pension. He gets only pension income and interest income. There will be 194 which will apply, but that will not apply in this case because here he's getting some other income like dairy income also. And here, why have I taken 194A? Because if a bank pays you interest, here 2 lakh 45 they are paying. If a bank pays you interest more than 50,000 rupees, they will deduct TDS. I have taken only this because they are not mentioned as the same bank. So I have taken only 2 lakh rupees on that TDS at the rate of 10%. So this is his liability. TDS was 20,000. So his tax liability ultimately is 10,160. No TDS on saving account interest since it is more than 50,000 as per section 194A, and this does not look like more than 50,000. This is a nice question to answer, and this would have got you 4 marks. But if question number 3 was puzzling, question number 4 is again really, really nice. Let's move to question number 4. Mr. Rakesh, again, 6 marks question, short-term capital gain, you'll make R and you'll make 5 arrows like we used to do in class. We've solved so many questions like this in class. Short-term capital gain will go to capital gain. Loss from speculative business has a unique blood group, if you remember. Long-term capital gain, long-term capital loss, again, unique blood. Income from business of textile after allowing all the depreciation, this is normal business. Income from salary computed, so don't minus 50,000. Loss from LOP, which is 80,000. Share of loss from firm. This if you have to ignore because if the share of profit is exempt, then share of loss will also not be taxable. Investment in PPF. This is after GTI, you get a deduction under section 80C. Medical insurance 80D, 24,000. We have not given his age, assuming he's less than 60 years old. And then 25,000, will he get 24? Yes. And for preventive health checkup, he cannot get 5 because his overall limit is 25, out of which 24 has been used. So balance is only 1,000 rupees. This is very, very simple. There is a carry forward a loss. Remember, quarantine stamp 1,20,000. This is the 8th year. So we'll try to set it off within PGBP only. You cannot go outside. And whatever remains will lapse. That's the word. Compute total income. And he has exercised the option of shifting out. Again, guys, everyone's shifting out to the old scheme. So they are all loving the old scheme. So, and also set the carry forward of losses. Very, very simple sum. Honestly, for people who thought this paper was difficult, These are gifts. I'll just calculate 15 marks question number one, 10 marks question number two, and 10 marks question number four. These are very, very, very simple. So if you had DT, which was simple, MCQ is done well, and GSC a little bit also you did, you would have cleared this exam, or you will clear this exam really well. So let's solve this. I'm writing it here. Just the way we used to do it, Rakesh. Salary is 2 lakh. I can minus house property 80,000. So 1 lakh 20,000. This loss is set off. So that is zero. PGBP, normal loss is 1 lakh. Your carry forward loss is 1 lakh 20, which has a quarantine stamp. And this 20,000 will unfortunately lapse. Speculation loss of 1 lakh 20, there is unique blood. So this will have to be carried forward. So there is one carry forward as of now. Short-term capital gain, long-term capital gain, long-term capital loss can be minus from this, but cannot be minus from short-term capital gain because it's unique blood. So again, 1 lakh 40 will be carried forward, second carry forward. So there are how many carry forwards? Two. This will become one number. This is second number. And that is your 4 lakh rupees GTI. You get three reductions, 80C, 80D, 80D, and your total income is 3 lakh 54,000. Let's see the working note. Share of loss on the firm, that working note. Assumed age is below 60 years, and hence deduction under 80D is maximum 25,000. The normal business loss of 20,000 cannot be carried forward since it is from the eighth year and will lapse. Long-term capital loss cannot be set off against this 2 lakh 80 because it is unique blood. And the speculative loss has to be carried forward, and long-term capital loss has to be carried forward. This will get you 6 really, really, really good marks. Now moving ahead to question number 4B. Which are the persons required to mandatorily file the return? Guys, we had discussed in return of income that if you want to carry forward your losses, you need to file your return of income on time or in time by the due date, that is June. If you don't file it by June, then you're allowed to set off that year. Earlier years also you can carry forward, but the year you make that mistake, you will not be allowed to carry forward that loss. This is under this, except to HD. Remember the shortcut also, except loss from house property and unabsorbed depreciation, which you can carry forward even in case you have not filed a return on time. So these are the persons who are required to mandatorily file. Any loss who from house property, sorry, any loss from normal business, that is non-speculative business, people having losses from speculative business, people having losses from specified business, people having losses in capital gain, people having losses from owning and maintaining resources. These are the people who are compulsory required to file the return of income by the June filing due date. What are the consequences of not filing your return of loss in time? If you don't file your return of loss, then that year in which the return was not filed in time will not be allowed to be carried forward. Except HD, you can write that and get your 4 marks here. Next, what is a belated return? A belated return is a return which is filed after the due date, which is given under section 139(1). It can be filed by 31st December or till assessment, whichever is earlier. We have discussed this very easily. But if you file your return late, there are 4 consequences called lift. Losses not be allowed to be carried forward. If you have to pay some tax, you'll have to pay interest under section 234A. There is a late fee of 5,000 rupees per person. And if your income is low up to 5 lakhs, then the late fee will be reduced to 1,000 per person. And TS, any tax after TDS, TCS, if there is any tax that you're supposed to pay, you will have to pay. Explain the non-applicability of updated return. Can I update my return? Yes. I'll just revise updated return. See, the government says you're filing your return in the assessment year up to 31st December. But let's say after that you realize that you've missed out on some income and you've not showed it to the government, then the government gives you an opportunity to confess. So this is confession. And this confession can be done up to 12 months plus 12 months, that is 24 months after the assessment year gets over. Let's take an example. Your year is 23-24 financial year. Assessment year is 24-25. In that year, if you've not done after 24-25, you get 12 months plus 12 months to come out clean. Updated return says that your income, there will be a certain extra tax you'll have to pay. On the first 12 months, 25% extra, and the next 12 months, 50% extra. But the updated return can be filed only and only if you want to add some incomes. Basically, the updated return should be for the benefit of the government. So when can you not file updated return? First, whenever you want to reduce your income, you cannot file updated returns. Whenever you want to increase your losses, again, good for you, bad for the government, you cannot file updated return. And whenever you want to reduce your taxes or increase your refunds, in these 3-4 cases, you cannot file an updated return. Again, for 2 marks, this is a great question. And this is 139.8A updated return. This is your DT part. Now we are moving towards the GST part. Similar, let's see how that works. All right, time for GST now, GST tax paper analysis. So let's move ahead to question number five, which is question number five of our paper, but question number one technically for GST. This one is section B, GST. This is a compulsory question. There are two parts. One is for 10 marks and 1 year is for 5 marks here. So this is 10 plus 5, 15. Same way, there was 15-mark question there. There is a 15-mark question here as well. There is a person called Galaxy Q Private Limited. This question was predictable. Somewhere you're purchasing, so purchase leads to credit. Somewhere you're supplying, so supply leads to liability. So you have to make two ledgers. One is a credit ledger whenever you purchase, one is a liability ledger whenever you supply. And then you have to calculate the payment. This is what is predictable. Here also, it was a predictable question here. Compute the amount, net minimum GST payable in cash. Let's talk about it. Let's read the additional information. Sorry. First, let's read the question. And while we read the question, we'll see whether it's supply or purchase, forget everything else. He is a person in Bharuch, that is Gujarat, engaged in various lines of business, provided the following details regarding the transactions made during the month of May 2024. Supplied. So this is SL, a laptop. Doesn't matter to whom supplied, but right now it's SL. So on this, there will be GST. Yes. Again, supplied. So again, there will be GST. Again, provided services. So supply. Again, provided services. So again, supply. So one, two, three, four supplies. Again, made a supply. So again, SL. And this is PC. This is purchase leads to credit. So four supplies, one credit. Now let's see the first supply. So we'll make liability ledger just like this. I made it GST descriptive questions. This is question number 5. Liability ledger SL and purchase credit ledger PC ICNS just like we had done in class as well. Let's see the first one. In the first one, you supplied a laptop with touchscreen. Option to managing director's friend does not matter to whose friend is supplying. As long as you're supplying for 60,000, open market value doesn't matter. What are you supplying at 60,000 into GST rate? It is a goods, so goods GST rate will be 6%. And this is intrastate, yes. Assuming it is intrastate, so 6% is 3,600, 3,600. Next, supplied printed letter cards to MK Industries, a registered person in Gandhinagar. Logo design was supplied by the company. So all you have given is a service of printing. So this 5 lakh rupees doesn't matter what are the cost, etc. On 5 lakh, there will be GST at the rate of 99% because this is services. Again, this is Gujarat only. So 99% here 45,000 and 45,000. So covered these two amounts already. Provided services of transportation of passengers. If you transport passengers with an e-commerce operator, if you remove your laptop or your phone and use an e-commerce operator, there will be GST. It's a service of 12 lakh 58,000. Again, this is GST, this is GST, CNS GST. And now you're providing catering services to a university in Patna. So of course, this is interstate, not intra. And in this case, providing catering services, if you remember TCS, transport, catering, and security, only up to school is exempt. This is to a college, and hence this will be taxable, but this will be IGST. So 38,160 will be IGST, again service. So service is dominating here. Next, made supply of goods in the territorial waters to blue waters. So you're making supply of goods to someone in Maharashtra, but the supply was made closer to state of Gujarat, 5 miles from Gujarat. So this is basically in the territorial waters. This is five. Again, something that was not discussed, but this is logical. At 5 miles from the baseline of Gujarat, this is totally unpredictable actually. So this is again something that is intrastate. So on 4,50,000, there will be GST of 27 and 27,000. This is again goods. And last is purchase goods from a composition scheme dealer. Composition scheme dealer does not charge you any GST. So there will be no credit on this. So there is no credit. So the credit will be only on opening if there is any. Now, during the course of filing invoices, accountant identified an invoice dated 31st March 2024. So he saw an invoice issued by Mr. Mahajan, whose residential house was taken on rent. Now, basically, he's missed out something. Now, if you missed out something, then you'll have to include it. And this is how you have to include it. This is for a residential house. If you remember residence. Now, residence given on rent is also subject to GST unless you're a proprietor. You remember RRR. Residence given on rent is taxable under RCM. So on 50,000 rupees, you'll have to pay RCM. This is the service. So on service, this is the rate. I'll just show you the rate. 9% of 5,000, that is 4,500, 4,000 now 500. Now I'll tell you how this has to be done, how RCM has to be done. First, RCM means you have to pay to the government, so it will go into a liability ledger. So 4,500, 4,500, RCM goes into a liability ledger. Why does it go to a liability ledger? Because it is RCM. You have to pay to the government. Next, because it's a purchase, this is a purchase. This is something that you've taken. So you will also go into credit ledger. So basically two impacts here. And the third impact is this 4,500, 4,500 has to be paid through cash ledger only, because RCM you cannot pay through the credit ledger. So there are three impacts. Repeating, RCM has three impacts. First, it's a liability, so it will go in liability ledger. Second, it's a purchase because you're purchasing, you're taking the residential house on rent, so it will go into credit ledger. And then it can be only paid through cash. That's 4,500, 4,500 has to be paid through cash. So there are three implications here for RCM. All figures are exclusive of GST. All inward outside supplies are intrastate except where details are given. And this is it. There is no opening balance. Perfect. So this one it is. So total is 38, 188, 280, 188, 820. This is your credit 4,500 and 4,500, which I'm utilizing here. So this is the balance. If you remember, the order of set-off cannot be used here because parents, that is IGST, has no money to pay IGST. So it's only CGST, SGST helping each other themselves. And this is the balance which you have to pay in cash. Plus, this is also something that you have to pay in cash. So ultimately, this is a yellow number, which is the net minimum GST payable in cash. IGST 38,160, SGST and CGST 188,280. Notes. Catering services is not exempt, one note on that. On purchase from composition scheme dealer, there is no GST, one note on that. On residential house, it is under RCM, one note on that as well. This is 10 marks, PC and SF. Similarly, is here there's a multiplex where they are supplying some tickets. They're supplying some tickets and snacks, and they're supplying only snacks. Tickets is a service. Combo is composite supply where you don't go to the theater to have popcorn. PVR popcorn is anyways expensive. So this is a composite supply where the main is tickets, which is goods. And if it's only snacks, then it is goods. So this is goods, and these are services. Next, 10,000 tickets under combo, 2,500 tickets only, and 1,000 tickets tokens for snacks only. So you have to multiply it and get the GST rate applicable. Snacks ke liye, this is the rate. Services 99% is the rate. You are supposed to, you're required to determine the following by explaining the relevant provision. Rate of GST to be applied when combo supply is made. When combo, it's a composite supply. So rate will be basically the rate of 99%. When snacks are sold, it's only goods, so 2.5%, 2.5%, and gross GST payable. So you have to multiply it. Here we go. Tickets, 2,500 into 200. This is the ticket. Service value is 5 lakh into 99%. So this is CGST, SGST. Combo is again a service. So again, CGST, SGST. This is 99% again. But snacks is good. So on that, it is 2.5, 2.5%. They've already given it. So this 2 lakh 50 is 2 point. So these are the amounts that you'll have to pay net GST payable. I've written three working notes. One is the composite supply for combo, snacks are goods, and the GST payable total is as under. So this is for 5 marks, not a very detailed question, but a pretty okay question. Only thing tricky was the snacks. Of course, snacks is goods. Example, if you go to a shop and you buy a packet of chips, that's not a restaurant. That's only snacks, those are goods. We move to the next one. Now comes the options which are good in life and good in the paper as well. There's question number 6, there's question number 7, and there's question number 8. Now let's see which are the options we will use. Considering this was a slightly tricky paper, we'll first see the options well. There is a person who is registered in Madhya Pradesh, provide the following transactions. So there is 1, 2, 3, 4 transactions, and this is for 5 marks. So this is something that you could do if you knew it well. But there are some tricky parts here. Determine place of supply. Place of supply is very predictable chapter. It was supposed to be therefore most people will know this really well for 5 marks. So this question number 6 now looks doable because place of supply is there very well. So question number 6 is strong. Question number 7. They manufacture semiconductors in the state of Assam. It only makes intra-state supply basically, and here we are talking about registration and revised invoices. So again, very strong this concept is. So 7 also A part becomes strong. We could look at this. Write a short note on rectification of errors, exception to the rectification, and time limit for making the rectification. This is also something that we know, but for 5 marks, I don't know how much to write. So seventh question is okay, it's strong, but not the strongest. Sixth question is good. And now sixth and seventh, we could do both or one of them depending on eighth. If eighth is very tough, generally it is theoretical, so it can be tough. If it's tough, we leave it and we'll go to sixth and seventh. CBIC issued a recent clarification on time of supply and respect of services of construction of road and maintenance thereof from national highways. Guys, this was completely out of syllabus. When they say ICI papers are difficult, it is because of this. But don't worry, again, this is first of all, eighth is an option. Sixth and seventh, we know. So you don't want to do this, no problem. And that also in eighth, even if you choose to do eighth, you can either do A or you can do this. Briefly explain the exemption available in respect to services provided by old age home and Rule 138E. This is on e-way bills. List any state taxes that are subsumed. So you could be looking at this question else. So let's first look at 6 and 7, which we are more confident about. Let's go to sixth one. This is paid remuneration for the services of a director. This is under RCM or FCM. We'll have to see when you pay a director. Guys, remember, some lawyers, some resident lawyers, in that we have seen when you pay a director other than salary, there is under RCM. So here you paid salary also. 8 lakh 50 on that, there is no GST. On 11 lakh 50, there will be GST under RCM. Next, paid rent to Indian Railways. If you remember, government is very lazy except four things which is trapped. So in railways, again, there is GST. Yes, you'll have to pay GST to the government. Next, for security services, is it under RCM? Yes, provided the supplier is not a company here, it is a company. So hence, this is under FCM, not RCM. And paid local corporation, if you pay to the government up to 5,000 rupees, there is no GST. So no GST on this. FCM, RCM, RCM. So this is how you will have to look at it. Assume turnover of Nutan last year was 67 lakhs because they were registered. It's a big business entity. You're required to complete the GST payable by Nutan. So in this case, they will pay under RCM. In this case also they will pay. Fourth case, they will not pay. So here we go. First case, they will pay. Second case, they will pay. Third case, they will pay. But fourth case, they will not pay. So this is the GST amounts. And this is the final liability. This is question number 6A. Next question number 6B. Very, very simple. 5 marks again, a gift from ICF. So even in GST paper, there are some parts which are very, very simple, like this part. First, place of supply. There is a person in Jaipur. He hires some event company in Madhya Pradesh for annual event to be held in Gujarat, that is Gandhinagar, Gujarat. So this is service. If you remember, section number 10 is for goods, section number 12 is for services. Any event, if you remember 7 days wedding, section 12.7, wherever the event is held, that is a place of supply. Here the event is held in Gujarat, so that is the place of supply. So this is the case, but this is B2B. Maxi Pharmaceuticals registered at GST at Jaipur, but here we don't have to see that. So here, wherever the event is held, the event is held in Gujarat. So that is a place of supply. This is Gujarat event, section 12.7. Event is held in Gujarat. So that is a place of supply. Next is goods. Very, very simple. There are some goods which you are trying to order, and there is movement of goods, delivery of goods. Whenever there is movement, 10.1A, if you remember, arrive. Wherever the movement terminates, where are the goods being sent to? For delivery of goods to MHT Limited, registered person in Ranchi, Jharkhand. So Ranchi, Jharkhand, 10.1A, that is the place of supply. Very, 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 very simple. Question number 6B. This is again 5 marks, which can never go wrong. Next, question number 7. Very interesting. Let's see what this is. There is a company called Rameshwar Industries, which makes some semiconductors in the state of Assam. It only makes intrastate basically within the state of Assam, and the following details are as under. First, you have to find out the effective date of registration. Now, I'll just recap what is effective date of registration. Suppose I'm liable to register today, and if I apply within 30 days, then the government says you are good to go, and I'll get the earlier effective date. We have a shortcut called liable and proactive. So was it liable? And if liable, was it proactive? Let's check. Date of commencement, commence business on March 14th. Turnover exceeded 10 lakh, 20 lakh, 40 lakh. Now, when does it become liable? Let's check. If you remember, there are 3 steps to check the liability. First, you get the 40 lakh limit if you fulfill the shortcut of pigs. Is it prohibited goods? No. Is it interstate supply? No. Is it only goods? Yes. And is it in some of the specified states of NT Mami, Nagaland, Tripura, Manipur, Mizoram? No. Or put Sam, Puducherry, Uttarakhand, Telangana, and Sam, Sikkim, Arunachal Pradesh, Meghalaya? No. So hence, congratulations. Rameshwar Industries will have to register only when they cross 40 lakh limit. So this date and this date is useless. These two dates are useless. We have to look at April 28th. That is the date of being liable to register. Now, when they were liable to register on April 28th and they registered on 15th May, they applied. So is it within 30 days? Yes. So they were liable and they were proactive. So your effective date of registration will be April 28th. That's the answer. Next, period for which revised tax invoice can be issued. So basically, from the day you are liable, that is April 28th, till the date of you get the certificate 29th May, during this period, whatever supplies you have made, you have to make revised tax invoice. And the time limit for this is 30 days from the day you get the registration number, because only once you get the registration number can you issue revised tax invoices. Again, a very good question for 5 marks. People who have done registration chapter well with my shortcuts of put SAM, anti-mami, etc., would have got this answer well. Next, write short note on rectification of errors. Can you rectify the errors once a return has been filed? No, you cannot rectify the errors once a return has been filed. That is not allowed under section 39(9). They say that errors cannot be rectified. But are there some exceptions? Yes. In the month you discover the errors or omissions, you can include them in that month's return. But if there is some interest that is payable, sorry, is there a tax that is payable, you'll have to pay it along with interest. That is the exception. And what is the time limit for this? So if I forgot to do something today, can I do it after 7 years? They say no, the shortcut is NA. That is next year's 30th November or annual return filing date, whichever is earlier. That is the due date by when this errors or omissions can be included. That's your question number 7B. We now move to 8th. 8th A part I'm not even discussing because it is useless, something that we had not discussed. In fact, no one predicted this question to come in the exam. So not talking about it, straight going to 8A, 8B here. Explain briefly the exemption available for old age home. Now, old age home can be run by you and me also, it can be run by the government also. For the government, it is exempt. And for us also, it is exempt if the amount charged per month is up to 25,000 rupees. So here we have to explain this exemption. This is why notification number 12 of 2017, we'll have to explain that. I don't think we have too much to write here for 5 marks. But again, if you write this, this is all there is in ICM material also. So don't worry about it. You'll get your marks here. Next. Rule 139, 138E prohibits certain persons to make an e-way bill. Part A of the e-way bill means e-way bill. Who is those people? We have a shortcut here called 222 suspend. If you've not filed your GSTR 1 for 2 months, if you've not filed your GSTR 3B for 2 months, if you've been a composition scheme dealer and you've not filed your GSTR 4 for 2 periods, and if your GST registration has been suspended, in these cases, you cannot make any outward supply. That is, you cannot file a e-way bill. But still, you can get inward supplies. There's no problem with that. And list any state taxes that are subsumed in GST. If you remember our shortcut, Vele. In the first chapter, we have a 3-mark question on the first chapter, Vele, that is VAT, entertainment tax, luxury tax, lottery tax, entry tax, and state sales tax also you could write. All these state taxes have now been subsumed by GST. Of course, GST was a little tricky, but guys, if you think about it, there were some parts of this paper which were copied from earlier papers. There were some which were little gifts by ICI to you, and that's how ICI paper is. If you're expecting it's like to be BCom paper, no, it's not like a BCom paper. It is an ICI paper, but if you're smart enough, you should definitely get 40, 50, and 60 marks in this paper as well. This is me signing off. I hope your results will be okay and good. All the best for it. Don't overthink it. Just like in life, ICI question, once you give the paper, forget about it and let ICI evaluate it. All the best, do well. See you soon.